Hey, welcome to Forex.Today, everybody. How you doing? So I'd like to start out today by going through the news, review what happened in Asia, review what happened in the European session. Got quite a bit of news on the calendar again today in the New York session. We got non-farm payrolls coming up at the end of the week, so that can move things. Yesterday was the last day of the month, and obviously we got some nice moves there. Lots of things technically to talk about, lots of things fundamentally to talk about. Another great day to be a currency trader. So let's start putting it together and get our trading day on, huh? Boom. Clean your workspace, baby. You're right, ECB tomorrow. Hey, is there ADP today? They moved that sucker. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Please visit our website. Guess what it is? TradersWay.com. Open up a demo, test out our execution. If you want, say hi to the support staff, and I think you'll find that they're attentive. I think you'll be very happy. I'm also here to earn your loyalty, one day at a time, day after day after day after day. I am here to help you develop skills and keep you out of danger. Over the course of blood, sweat, and tears for years, hopefully you'll become a very good Forex trader. When you decide to trade real money and start your trading career in business, you'll choose TradersWay as your prime broker. And together, hand in hand, we can be successful business partners for many years and decades ahead. We do these sessions every day, 7:30 in the morning, Monday through Thursday, here at Forex.Today. And every Friday, I'm at FX Street for premium members, where I'm also Forex Speaker of the Year. Cool, huh? So let's get on with it. Lots going on in Asia. The biggest thing that you've probably heard is Abe pushed off the sales tax, which I think even just yesterday I said two things were going to happen. He was going to delay the sales tax and then not till like the September meeting. Then in September, they'll do something stimulus-wise. But the interesting thing is it's a fiscal move, right? And I love decisions to not screw things up. That's a great decision. Isn't it funny? The good news is that they decided not to do something stupid. Whoa, that's a breakthrough. So congratulations to Japan. 1, 2, you rock. I love you, Abe. Yeah. So anyways, what else is going on? Chinese PMI. Third month of expansion. Right on. I love it, huh? 50.1. Once again, I'll point out the fact, or how about the discussion here? Are they really that good in the numbers where they know the difference between 50.0, 49.9, or 50.1? Really? They're really that good, huh? Well, thank goodness they just squeezed by and got expansion. Right on. Okay. Hang on, I'll get through it. Japanese capital spending way up, but I think that's probably related to the earthquake. Japanese PMI, 40-month low. Say what? Right? Say what? right? That's pretty bad, yo. Australian GDP, first quarter, right? 1.1 year over year, huh? 3.1. Holy smokes. That used to be sort of a normal thing. United States is trying to hit 2. And look at them. Holy smokes. 3.1, huh? That's pretty good GDP relative to what other people are doing. Biggest increase in 4 years. Yeah. Now the funny thing is, the idiot analysts were thinking 2.8, yet it came out 3.1. Amazing. Ripper. Yeah. How about the Kiwis? 2.5 year high on the trade terms of trade. Korea, imports down, exports down. What's going on in Korea? Apparently nothing. All right, so here's the thing with China. Every day they set the value of their currency. They're supposed to be strengthening their currency because they're trying to move away from an export economy. And yet they set their currency at a 2011 low. Right now it's 6.5865. Not long ago it was 6.4. 6.6 is what we're tickling now. Yeah. And then, of course, the delayed taxes from Abe. Thank you, Abe. In Europe, Italian PMI, 52. French PMI, 48.4. Wah, wah, wah. It sucks. German PMI, 52. For the whole Eurozone, 51.5. UK PMI, 50.1. Just squeaked back into expansion. Good job, UK. How about a mortgage approvals? Miss, but I wouldn't get all freaked out about that. So anyways, the French are losers this month. I'm sure all the strikes are going to help too, right? Coming up today, no ADP, is that right? Did they push it off because of the holiday? Guess so, yeah. Yeah. Ken's a Kate stalker. Ken's got a Kate fetish. Yeah, Kate posts at Forex.Today. Yipper. Okay, what's going on today? US PMI, because everyone's got to do their PMI, right? ISM manufacturing, no, okay, fine. I wouldn't make a big deal out of that. Construction spending, yeah, more is better than less, right? And then, Mexican peso remittance. Gotta love that peso. Whoop, whoop. Anybody follow up on those trades? We talked about it yesterday, and a few people said, oh, well, I don't know how to trade that. And I said, well, here's a link to the video that explains how and why. Anybody actually go back and watch that? Or did you throw that fish back in the lake? Tisk, tisk. Hey, Nick. Tisk, tisk. So that's that. Boom. Oops. Boom. How about this one? Yeah. Didn't have time to make money. I know that, Nick. Just throw the fish back in. I actually like dancing. I feel so free. All right. Yeah. Thanks, Shug. All right. So here we are. USD yen. I had two levels of resistance. We were at one. I was guessing more like 113 and then a big drop. So it got to about 112 and then a big drop. And this is obviously in response to Ave. Ave Maria. Yeah. So anyways, comes down like a ton of bricks. Something you don't want to stand in front of. You don't want to stand in front of a freight train here. Pretty nice, technically. Yeah, remember I was joking how Abe at the G7 meeting. It's the end of the world. It's the end of the world. Save me, Janet Yellen. Save me. Yeah, pretty funny. All right, breakout, retracement. All right. So when you get this, when you get the lower low, you take the previous low, drag it across. It's your new sell zone, right? New lower low. Take the previous low, new sell zone. Now, of course, it didn't go that far back, but you could have fibbed it. And then basically down. And then now you really should kind of mark this. That's on an hourly chart. Okay. So there's stuff going on there. You can see it's nice technical trades, right? Breakout, pullback, breakout, pullback, breakout. Those moving averages are pretty classic, right? Drop like a ton of bricks, pull back to the 21, drop it like it's hot. Oh, but it's also the psychological level of 110. I mean, it's cliche, right? Cliche trades there. It don't get no easier. Right? You guys know the pattern. Say where you break through a 0-0 psych level. So you're down here. It's going to pull back somewhere between 0-0 and 20 for a new sell, right? Have you picked that up over the years? Right? I mean, I'm clear as a bell there, right? Somewhere between 0 and 20, you got to get short, right? 20 is about here. And 0-0 is a little lower, obviously. All right. So there's your cliche sell zone. Right? So you find yourself down here, pulls back, drop it like it's hot. Peter says, "Is that no, 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 everything." So you have a psych level, and if there's an uptrend, right, it's going to break through, pull back, and you buy. There's a downtrend, breaks through, you pull back, and you sell. Is it a fib? No. No, 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 no. Psych levels, guys. 0-0 to 20. So this is 110, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. We're in a downtrend. We broke through. You sell the retracement somewhere between 110.00 to 110.20. That's your whole sell zone. So if you find yourself at 30, you shouldn't be shorting. You should be out. with a loss. Okay, but the pattern is back, drop it like it's hot. So you really should be short, like even 95 would be fine by me. Okay. Yeah, the 0.20, 20.80 and all that kind of stuff. No. It's not a USD yen thing. It's everything. Okay? So not fibs, price. Take a look at gold. Okay. So our target for May was this 112.06, and then I have it pulling back to, I got to squeeze it on a 4-hour chart. I have it pulling back to 1250, and then maybe another drop down. We'll see. I'm not super, super in love with that, but it is what it is. And so far, it's trying, right? So we've gone from a little bit below 1,200. Now we're $10 or $12 higher than my exit, which is nice. And now we expect this retracement, so we want it to go up, and it's $12 higher. I would make a big stink about 12, but it's 12% of our down move, so it's starting the process, maybe. Now, have you gone through and done all your new monthly pivots? Yeah, we could do oil. Am I fundamentally bullish on gold? If countries keep increasing negative interest rates, then gold should go up. Okay. What is the dollar likely to do over the next 2 years? Increase in value or decrease in value? Okay. So based on that basic assumption, what is a assumed move for gold? Down. Okay. Doesn't mean it has to, right? According to my Harvard professors, I had an argument about it with him. But so anyway, so just with that in mind, no, I'm not necessarily a bull or gold, no. But I believe the only reason it did rally this year, because it did, you can see. Now I have the $100 short, so you can see I'm looking for the downside more than the upside. But this upside move, first of all, this was sort of my target from the giant move. Okay. And so we're down there. So that, I don't know if that's a dead cat bounce or not. But another thing you could assume this move is negative interest rates throughout parts of Europe and Japan. So that would make gold more attractive relative to guaranteed losing money somewhere else, right? Doesn't mean gold is actually good. It's just compared to being guaranteed to lose money somewhere else, gold looks better because at least you're not guaranteed to lose, right? But with that being said, I do have it coming back down. Okay. Do you think Draghi's going to announce an increase in negative interest rates tomorrow? Then gold might not even go to my, I don't know what you want to call it, lower high, right shoulder type thing. It may not even do that. Right? just remember, like, regardless of what your charts say, who's going to buy gold and drive it up $50 an ounce? Where's the money going to come from? What's the catalyst to make people, let's say you were going to, let's say you were going to spend $100 million to buy some gold. It's real money. Would you be, nervous about your entry? Or at least serious about it? You know what I mean? It's a serious decision, right? So are you going to make it lightly? Are you just going to jump in today? Are you going to jump in tomorrow? Are you going to wait for non-farm payrolls? Like, when do you take the leap of faith? Well, it's helpful to have a catalyst, especially if you have your money in a European bank. The Draghi tomorrow says, all right, an increase in negative interest rates. And you're like, son of a, I have to move my 100 million because I'm just getting killed here at Deutsche Bank, right? So you buy some bullion. That could be the catalyst, for example, and therefore gold goes up. Okay, so there's the thought process. And without that, there's no real reason for the money to move, right? Okay. Oh, yeah, and by the way, I asked, and I don't know if you guys responded. Have you gone through your monthly pivots? Yeah? All right. Well, we should probably review some together. The June bearish target for gold is 1155. The conservative target for gold as a bear is 1175. And oh my God, that's my target from 2 weeks ago. Oh, actually, 2 months ago. No, whenever the short, that was the beginning of May, right? So 5 weeks ago, we had it dropping, retracing, and dropping to 1175, which just happens to be the new monthly support pivot. Holy smokes. What a coincidence. Isn't that funny? Funny how, right? Like a clown. Isn't that crazy? The new S1. So as a bear, I kind of like that. And then you notice my pullback, the new pivot, new central pivot is 1139. So let's say call it 1140 or 1240. And I was just guessing 1250 and then a drop. So what if it only goes to 1240 and drops? Yeah, I'm good with that. Also, if you're trading weekly pivots, the weekly pivot is 1175. Oh, snap. Cluster. But I don't think we're going down there. But, it'd be interesting, right? How about our horrific non-farm payrolls? We come out 99,000. Oh, the Fed can't raise interest rates. The US dollar's way overvalued. The dollar tanks. Gold skyrockets? No, wait, that wouldn't work. So you'd have to have a huge non-farm payroll. I don't know. Whatever. It ain't going to happen. Okay. But still, someday, maybe. All right, everyone's jonesing for some oil. So back in the middle of May, actually, our April analysis said it would go up to 50. So at 49 and some change, because I think there was a weekly pivot, 5 weeks ago in here. So we had that coming back down to 45. My whole zone is around 50. And we double topped on the big figure. Lower low. Okay. So OPEC is meeting today in Vienna. But nothing good is going to come of that. Yeah, well, they're already there. The OCED's meeting today too, aren't they? Anybody in an OCED country? Oh. All right. So how many people are not familiar with OCED? Okay. You are now charged with the task of becoming familiar with OECD, the Organization for Economic Cooperation and Development. So I'm just like, I thought they came out with something today. Global economy stuck in low growth trap. Policymakers, oh, this must be it. So imagine an organization that reviews economic statistics for economies around the world. And to do so, they have to employ economists and PhDs and quantitative analysts. And then they give you the research for free. So I can't make you better looking, but boy, I can make you smarter. So you can spend some time on this website here and improve your macroeconomic view. Okay? There's a lot of videos and stuff too. So like here, would you like to see the latest economic outlook? The global economic outlook and interim economic outlook. Ooh, snap. And for those that can't read, there is a 1-hour video. Isn't that awesome? What do you do with your free time? I can't imagine. So I hope when I show you things like this, you just get super excited. And by the way, an OECD, I don't know. You need to know this stuff, guys. That's all I'm saying. There's lots of great information there. Okay? Lots of great information. You could spend, literally hours today. You could spend hours. I think I probably on any given day spend 3 hours on research, just reading and watching and learning, and probably 3 hours a day. All right, so anyways, there's a little tip there. No, I ain't giving you no short version. Who said there's a short version? Hell no. Forget it. I'll put it on a silver platter for you, but you're gonna have to do the eating. All right. So anyways, so maybe a down and an up and a down. So I still think there's a lot of oil in the world. Let's see if I can get some information for you on that. Oh, wow, all this unprepared stuff. I can't remember if it's the IED or the DOE. Or it's the EIA. Sorry, there it is. All right, so do you guys ever spend time on this website? If you recall, I tell you that peak oil occurs on June 1st, which is today. Hello, peak oil day. And I said I looked at 50 years worth of oil inventory data on a month over month, view. I got that from here, the EIA, the Energy Information Agency, or Administration, sorry. Do you know the history of the EIA? Well, let's just say there was a time when nobody knew how much oil there was. So it was really hard to price things. So when someone says, hey, I think oil's going to go up, hey, I think oil's going to go down, this is when you say, shut your mouth. You don't think about it. Let me tell you what it is, huh? And they'll actually tell you. Okay? May 20th. U.S. crude oil refinery inputs averaged 16.3 barrels per day during the week ending May 20th. 92,000 barrels per day less than the previous week average. Refineries operated at 89.7% of their operational capacity last week. Gasoline production decreased last week, averaging about 9.9 barrels. So you can go through this. Look, there's less gasoline available. Well, either they were producing way too much gasoline the week before, or gasoline prices are about to go up. Ooh, snap. About the oil situation. I don't know. That's a long question, but I don't know. I did well in the class. That's all I can tell you. But anyways, so you can actually get this data. Okay? And they actually will email it to you. I used to get this week after week after week after week. And there's some really nice charts and stuff in here usually. I'm trying to think. This is the weekly status. Yeah. Oh, here it is, full report. Oh, this is way too long. All right, whatever. So again, if you want to know about oil, oh yeah, some of these are nice. It's not the. So look at this. Here's the 5-year range. Here's where we are now. Okay, let me zoom in. They've changed the colors. Anyways, it's interesting. Okay. Okay. You see this kind of grayish area? This is the normal range. Just imagine two standard deviations, like Bollinger Bands, right? That's usually where we are with the amount of oil in storage. And this is what we have now. Holy what? What are we going to do with an extra 200 million barrels of oil? Oh, you get IMF stuff? Yeah, you know, methodology and stuff's quite differently. So yeah, you know, this is, you can just get this data. Gasoline stocks and stuff. So like oil and gasoline, actually they can be correlated, but they don't have to be. Because if there's a shutdown in refineries or you know, because they have to like clean them and maintain them and stuff like that. You know, oil could be cheap, but gasoline could be expensive just because of a refining issue. And there's only one real purchaser of oil, and that's refineries. Right? Because you don't use oil, you don't use crude. Who buys crude? Refineries. And they refine it into things like jet fuel, stuff you can make lipstick out of, stuff you can make plastics out of, stuff you can make, you know, oil and gasoline for your car, or diesel, or tar, right? That's cracking. Not fracking, cracking. But anyways, you know, there's so much information out here, guys. It's just awesome. I mean, just absolutely, totally awesome. Okay? Because now you could say, wow, did you see our propane stocks in the United States? Oh my God, propane prices are going to go up. Actually, you know, we're about on the upper end of normal range. So actually, propane prices are fine. But hey, if you can't freak out about propane stocks, what can you freak out about, right? I use a lot of propane, by the way. I'm the type of guy that when I fire up the barbecue, I put all burners on, full blast, and I walk away for a half an hour. And I come in with a giant filet mignon, and I go, I open it up a crack just enough to get the steak in. Throw the steak in, shut the door quick. All right. So silver's on a tear, guys. Maybe it is the end of no, forget it. So here we are, bottoming out on the weekly pivots. Is it possible, dare I say, is it possible professional silver traders use weekly pivot points? How weird is that, huh? Yeah, that's pretty cool. Anybody spend a serious amount of time on precious metals like gold and silver as a trader? Is this something that you do? Nick brings up, I'm looking back at the chat, Nick brings up the Harvard professor thing. You know, I was reading about the professor that interviewed Grandma Yellen just a few days ago on Radcliffe Day. And so, that's when she basically changed her tone to say, actually, she does want to raise interest rates now, right? I read about that professor, and apparently he's a multi-millionaire from selling textbooks to college students. I'm like, what? He's made millions? Oy vey. Seriously? I don't know if you remember what it's like to be a college student, but you pay a lot of money for a class, and they're like, oh, we have some required reading. You need to read this, 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 and this. And then you go to the bookstore, you pick up the first book, $380 for the first book. They're like, there's 4 or 5 books for this class. You're like, this is stupid. $380? Holy I mean, seriously. That's what, I don't know if you, I don't know when you were in college, but it brings back memories of how stupid I thought it was back in the 90s. Now I'm an old man, and it hasn't changed. Even an old man. Nothing's changed, man. So anyways, look at this. Gold double bottoming. What are you going to do? Are you playing it? Okay. I already have the range out. So I don't know. I think what we talked about yesterday is that gold would rebound into here or on Monday. Because I did a session on Monday. I don't know if you were here or not, even though it was a holiday. And I think I had it going back to this zone here to drop it. And, it did. It went from 1620 to back down to 1590, back down to the pivot, right? And it's bottomed out. So now the question is, are you going to play it as a double bottom? And if so, you're assuming a higher high. So in this case, you're assuming a bust through the 55. Therefore, the target's the 200. Plus, it's just going to cluster off of this, right? So if you take this shot here on silver, that's your trade plan most likely. Yeah. Oh, yeah, I know it's silver. I didn't say gold. I know it's silver. Yeah, Lucas, that's true too. Lucas brings up a point, because I've done this several times where I'll read the textbook. Before the class has even started, I've read the entire textbook, every page. And then they get there and they never even mention that. None of the stuff in the class is actually in the textbook. Like, you son of a... And you're going to tell me... Okay, so there you go. So we've done silver, gold, and oil. How about the stock market? Okay. So if you recall, based on this giant X over here, oops, come on, drawing tool. All right, because of this giant X, we have a giant X here. Right? Bring it across, there it is. Doop. Go to a 15-minute chart, and ooh la la. Ooh la la. So, how do you want to slice this one up? Do you want to do head and shoulders on this one? Okay. Nah, I'm not going to go through the head and shoulders. But, you know what? Let me mark this up differently. Okay, the way you'd mark this up is, okay, obviously lower low, lower high. Right, so you know that one. That's your standard fib. Lower low, lower high. But then on a more macro level, you got that lower low. Still, you got to drag this across and say There's your sell zone. It did retrace back to here and then drop, and then, you know, it took some time. But nonetheless, you know what I think a lot of this is? And then this. It's the 31st of the month. Okay? So it's not people selling, it's people booking profit so that they can get a bonus at the end of May. It's not even really rebalancing, really, Andrew, but that's another way of saying it. And, you know, I think rebalancing needs to happen. But the problem is that because the economy is so slow. Oh man, this new chair is great because when I lean back like this, the seat slides out. Nice, it's really nice. Anyways, the economy is improving so slow that, you know, the need to move isn't quite there, you know, to move from a defensive play to some sort of, you know, cyclical growth play. And it's just, you know, it should be coming, but it's so slow, you can't see it. It's like knowing you're the frog in the pot of water, but the heat's on so low and it's warming up so slowly, even though you know it's going to boil at some point. It's just, it's not going to be today or tomorrow or next week, and you're just, you know, so it never really shows up, right? So it's, you know, I don't know. So to me, it's just, this is some profit taking and doing the job, trying to get your bonus at the end of the month. You know, you don't want to give any back. There's no reason for this to go down, right? So if you guys remember this, you know, I gave like a 20-minute discussion why the stock market was not going to crash. Okay. But it doesn't mean you're not going to take profit, right? So what's the plan here? Yeah, let it fall and buy the dip. So yesterday and Monday as well, we talked about the yens. Now, my long-term hope, like the end of the year, is that the yens will weaken. What did we talk about yesterday and the day before? What did I think the yens were going to do on a shorter term basis, like the next 3 months, not the end of the year? Yen strong. Yeah. Yen strong in June and July. Now, did I actually say that 6 months ago? Like literally 6 months ago, or even a year ago, the yens would be weak last fall, and then it would be strong in January. And then I thought there'd be like a little pullback in February, which we never got. Then strong in March and April, then sideways in May, then strong in June and July, and then weak, well, neutral in August, eventually weak in August, and then hopefully weak in September, October, November, right? And then, right? Yeah, and just yesterday we talked about it again. And was the yen strong yesterday? Not when we talked about those things, right? We were, however, at weekly targets on the last day of the month and on many of these suckers, right? right? I think we were at things like this. But so anyways, it's just interesting now that the Japanese yen is the strongest currency on the planet on the first day of June. But more importantly, I'd like to point out that a lot of these pairs, were at important areas. Right? Like, yeah, like this Euro Yen one was a big one. I was mentoring on Monday, and one of the things we did was we shorted this double top. Now, I think he got knocked out on this because it's the next day. But nonetheless, you can see the logic, right? I had one of these conversations too, like if you short a double top at a reversal pivot on Monday, you should feel good about losing money. That's the way you lose money. If you're going to lose money, that's the way you want to do it. Sell at resistance when it's probably going to fall. And if it goes up and you lose money, good. Feel good about that. That's a good loss. I don't think you lost money on it, but anyways. But these pivots come into play, right? Isn't that interesting? This is the weekly aggressive target, definitely sellable. So imagine on Monday you sold this one and your stop's up here. Right? Sell on Monday, take profit on Thursday. You ever hear me say that? So I'm just going through some of these things, right? You notice the monthly pivots? Let's look at some of these then. Okay. Monthly M3. What is our target? 105. Projected top, projected bottom. That's unpredictable, right? Do you think a professional would actually do that type of analysis? Well, of course, the answer is yes. They absolutely, totally, unequivocally do. So we're bouncing here at a pretty important area, right? How's it going to behave? Well, you would assume some sort of bounce here. The weekly target and the monthly central. So you have to ask yourself, what is the plan? Are you going to look for something like that? Maybe a trade on Monday or maybe Friday after NFP. If it comes way up here, are you going to take the shot? And I suggest you start doing that now. Okay. So for those that trade oil, I hope you're reading the analysis. Here's oil analysis talking about problems in Nigeria on Forex.Today. It's nice to know these things. Have you guys started leaving feedback or likes at least on the analyst so they know that what kind of information that you need? Yeah. Did any of you post in the activity feed a trade idea? I would suggest to you that once a day, you make a post in the activity feed. Is that right, Andrew? That's cool. Thank you. Yeah, you could share that information. All right, let's pick a different currency pair here. Aussie. Are you a bull or a bear? If you're a bull, you want to buy at 79 and target 83. If you're a bear, your target is 77. Where do you find pivot targets and stuff? Yeah, I can tell you, Brendan, or you can buy my book as well. But I can just tell you. You ready? Why don't we do it this way? Boom! Dun, 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 dun. If you're a bear, okay, your sell zone is the area between the M3 central pivot point area, okay, and your target is the M1 S2 area. If you're a bull, your buy zone somewhere between the central pivot point and M2, and your target is the area of Well, I'll say this one will be, R2 and M4. Okay? Look how just this is slowing down. What do you think is inevitable? Something like that? So the Japanese did something interesting today. We could call it a fiscal change, not just a monetary change, which is very interesting. So now Abe is going to need to get with Abe, Kuroda, and we need some stimulus now. Well, I think you could look at it, Zelda, is that the Aussie's a bit neutral right now. So Aussie yen coming down is mostly yen strength. Boom, 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 boom. So if you want pound yen to go up, you need to be eyeballing this area big time. Doesn't look like it's going up now. This is where you need to set your ambush, ladies and germs. Okay? If you're a bull, you need to be watching this area. If you're a bull. If you get that right and you're long around 57, 157, okay, you're going for 167 is your conservative target. Oh, that's 1,000 pips. Oh, I know. Fred, what exactly would Australia be diversifying into? They're 40% of their economy is natural resources. It's going to be hard to get away from that. Yeah, if you think the uptrend is broken, yeah, then obviously you wouldn't want to do that, right? I'm just suggesting that if you're going to play the monthly pivots, we're in the buy zone. Okay? And if you are predominantly bullish, and it doesn't bounce here, that's going to suck. But you still might take a shot here because it's support. And you might take a shot here because that's where the bears would target. Bears would get out. So at the bare minimum, you know, and on pound yen, you know, you could scalp 150 pips without trying. Of course, you can lose 150 pips just as easy, probably even easier. Okay? But what I'm trying to say is no matter how you slice and dice this, if you're a bull, you buy at support. There is support there. There is support there. And more importantly, this is killer, ridiculously important support. Because if it bounces here, it means we're heading up, way up. If it goes a little lower, then we're only going to go to here. Okay? And if it goes, if you're buying here, you're simply just buying the fact that, you know, you've hit the targets and bears are going to get out, and, you know, you're going to scalp your way back up probably range. So either way, you know, you're going to cry if you don't make more than 500 pips. So Australia is moving to investment to or mining to production. What is this? What are you talking about? Service-based industries were the other contributor to growth. Sure, finance and trade. Sure, yeah. Yes, tourism. Sure, fine. Arts and recreation. Sure. Okay, of course, all of that is completely ridiculous as well. We should just state the actual facts. Australia has an enormous supply of coal, and it's the best, highest quality coal in the world. And it's also unbelievably easy to mine and extract from the earth compared to normal sources of coal. It's an absolute total blessing. So that's government flapping their lips, but it's just ridiculous to say that Australia is going to move away from iron ore and coal production and gold and diamonds. Ridiculous. Now, the issue is they rely on these industries a lot, but there's nothing you can do about it. What are you going to do about it? I mean, it's a blessing. They should wake up and count their blessings. So a few years ago, when commodities were high, the Australians, in their utmost brilliance, decided to elect a government that went into the natural resource industry and crushed it, and then their economy went into the tank. And I say, well, that's what you get. That's what you get. So anyways, Australia has lots of iron ore and coal, and it's great quality, and it's close to the people that need it and want it. It'd be just absolutely totally ridiculous to try to move away from that, or even want to move away from that. And just the mindset's crazy. You know, and then on the other side of that, let's say the financial services sector, if there was no, you know, natural resource industry, there probably wouldn't be a finance industry either in Australia. So, yeah, meaning less dependent. So, but you know, even that, just the idea that they're posting things like that is just sort of a weird thing. They need to not shy away from it, but embrace it, right? So, like, you want to know something dumb about the United States of America? It's also a natural resource blessed economy. One of the things they've been blessed with is oil. Even when they were importing huge amounts of it from the Middle East, they still had a lot. The United States just consumes an unbelievable amount of natural resources, but they've been blessed with lots and lots and lots and lots. So one of them is oil. And, well, oil is located in the ground here, but is used everywhere. But before it can be used, it needs to be moved somewhere else and be refined. And then once it's refined, then it has to move other places. And it goes through pipelines. It goes by truck and by rail and all these different things, right? So let's say you're moving oil from Utah to Cushing, Oklahoma. And it's got to go on a pipeline. Did you know every single county and then every single state that oil pipeline has to cross has different rules and regulations and regulatory agencies? How dumb is that? So basically, you got to bribe the guy in this county, and then it crosses a border into the next guy. Oh, you got to bribe him. And by bribe, I mean you're taxed and regulated, and some other agency dude shows up and says, oh, well, we have such and such a tolerance on this. And then you cross the border 5 inches away, and the next guy shows up and, oh, well, we have different tolerances on this, and we have this, and we have that. And then the state guy has to show up and say, well, you know, we have different rules and regulations for this. And it's, you're like, dude, I'm just moving oil from here to there. Oh, well, we have to have 27 different people involved from different agencies. And by the way, a lot of our rules conflict. And some of our rules make no logical, intelligent sense at all. They're just, that's how it's been since 1890. You're like, that is dumb. I'm an entrepreneur. That is dumb. You put me in charge, I fix that fast. You know what I mean? Yeah, well, somebody, that's why I said Peter says, you know, it's who profits from the red tape. Well, that's what I'm saying. Basically, it's a tax or even a bribe. Oh, well, you know, we have rules that are different from the EPA. Oh, well, let me tell you how we do it here in Jackson County, Mississippi. Really? Yeah. All right, here's some money for your election. Great, come on, pass it. Oh, you got your permit. How nice is that? You know what I mean? But just like, really? So, you know, I'm not just picking on Australia. Oh, right. Just amazing that a modern economy could be so dumb in so many cases, right? Shows you how much money there is. But all of that tax is waste and the inefficiency. And the inefficiencies cost. But let's say, what if that adds up to $5 a barrel or $3 a barrel in just wasted efficiency, which somewhere along the line is a cost. It becomes a cost. What if it's $3 a barrel extra? What if it costs you $3 per tank? Every time you fill up, it's $3 because the system is so inefficient and wasteful. Because now you got to have guys to deal with all these different agencies and blah, 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 blah. So anyways. You know what? I just realized I've gone over on our time. Yeah, it keeps budgets up. Great. So let's regroup tomorrow. Thank you for your time today. Really appreciate seeing you every morning. Okay. And I'm already looking forward tomorrow. Sorry I went over today. There's so much to do, so many pivots to discuss. So I hope you go through the various websites I showed you today, the EIA, and the OECD. I hope you post a couple of times on Forex.Today. That'd be cool. So peace on earth. May the pips be with you. May your profits be above average. Cheers.